Good morning, everyone. Thanks very much for your time today. Today we have Mayur Resources. ASX code is MRL. On the line today we have Mr. Managing Director, Mr. Paul Mulder, who's with me right here.
G'day, guys.
Morning, Paul. Also, we have from Sydney, Eddie, who's from Viridios Capital, who's going to talk about carbon credits and the whole net zero chain. So great to have Eddie on with us as well. Eddie will come in later. But first up, a bit of housekeeping. You're all on mute right now. Obviously, you can ask questions. Please feel free to ask as many questions as you like via the panel. We'll try and get to as many questions as we can, either during the event or post-event. The event run for about an hour, bang on, and a recording's been made. So if you do miss anything, if you come in late, anything like that, you can always watch it later to your heart's content. So thanks again for your time this morning. Quick poll first up to see how many shareholders are on the line out there, and let's have a look. Okay. Now, quick poll here, guys. Are you a Mayur shareholder? Yes, no, you're thinking about it. You were previously. We love all our shareholders. We love anyone who's thinking about becoming a shareholder. And even if you're a former shareholder, we still love you. So hope to, just wondering how you guys, where you're from. So good responses so far. Got about, oh yeah, okay, about half and half. So that's great. So it's always great to have hopefully new investors out there. I'll just run this for a little bit longer. And it's looking like about half and half, considering. Okay, guys, thanks very much for your responses. And let's close that off. And look at the results. Are you a shareholder? About half? No, about half. So look, we'd love to have you on board at some point. Hopefully today's webinar will help. Considering, great. So thanks everyone again for all your feedback. Now, without further ado, I'd like to hand over to Paul. Hopefully you all know Paul already. Paul's going to give an update on Mayur's announcement just recently about the Forest Carbon Concessions in PNG, Mayur's push for net zero, what it all means for Mayur and their central cement and lime project in PNG. Without further ado, I'd like to hand over to Paul. Thanks, Paul.
Thanks very much, Anthony. Okay, let's show a screen.
Okay. Show screen. Okay, everyone. Away you go. Just move the arrow for the screen.
Okay, everyone, thank you very much for your time today. So Mayur Renewables, we're going to be covering off the high quality nature-based RED+ carbon offsets and what this means well over and above just protecting the environment with regard to carbon, but also preserving PNG's biodiversity and also the improvement that it will make down on the ground physically with the living standards, with landowners, etc. Okay, so disclaimer, read at your own leisure. The bulk of today will be spent talking about the nature-based red carbon offsets, whilst the Mayur Renewables division does have a focus on solar and battery storage as well to assist with our central cement and lime project, as well as geothermal. The bulk of our discussions today will be around carbon credits and the process and type of credits that we'll be securing for Mayur Renewables and our partners. Just to give you a little bit of geographic context, this really just shows the three key project areas that we're assessing at the moment. There's a heads of agreement with PNG Forest Authority to look at those. Out of those areas, there's several areas which I'll cover off on. We've had over half the areas in hectares permitted and beginning the carbon verification process. This is done in accord with, I guess, our commitments from an ESG point of view, for ourselves to be able to present in our central cement and lime business a carbon neutral product, but also there will be significant surplus of credits which the presentation will outline that will be traded, and Mayur with its partners, the landowners and PNG government will enter into the carbon trading market. So we see there being a great opportunity here for this business to also be standalone when it comes to carbon trading. So if we can look at, just for a moment here, if we can look at the decarbonisation race that you're hearing about to net zero, one of the key things, if you look at where the role of nature-based offsets, which is what we're looking at, will play a role, global demand for these voluntary carbon credits could increase by a factor of 15 from 2030, by 2030, and over 100 times up to 2050. But what does it all mean? So from a scope 1 perspective, there's direct emissions from the company's operations. The key here is if you look at, 1 in 5 of 2,000 of the largest publicly listed companies globally have committed to a net zero emissions target, and they range from everyone from airlines to steel mills to computer companies to banks, carbon intensive markets or manufacturing sectors, etc. So there's going to be a lot of work being done to decarbonise operations, and they're going to come from a multitude of different things, and that includes technology changes, the way business is done differently. In addition to that, there's going to be these legitimate voluntary carbon offsets where it's not possible to neutralise through technology today every single carbon emission, but there is an opportunity to stop logging, reclassify those areas that were already slated for some time already to be logged, and reclassify them to some form of carbon estate or carbon conservation, whereby it's not just the carbon, it's also the surrounding community and the biodiversity, flora and fauna that continues to be protected. So that you then have your scope 2 emissions, which are indirect emissions from the company, from companies globally, and scope 3 is indirect emissions from companies' supply chains. So we as a business that will have scope 1, 2 and 3 emissions will be utilising these carbon credits to offset our footprint, but as I said, the large majority of that will be utilised to trade in the voluntary global carbon market.
Paul, I might want to chime in at this point, if you don't mind. Can you hear me?
Yeah, thanks, Eddie.
Yeah. It's a good slide to talk through, and hi everyone, I'm the CEO of Untitled Capital based in Australia. This is a very good slide, and if you look at the quote from McKinsey on the left, which really indicates the scale of the carbon markets is really becoming a key commodity. It not only shows where carbon emissions occur, but the use case for carbon offsets. And while the numbers aren't in yet for 2021, as Paul was alluding to, we know that net zero corporate commitments have been growing exponentially since 2019. In 2020, the number of corporates net zero commitments aligned to 1.5 degrees grew to 1,565 corporates with an emissions footprint of 3.5 gigatons. That's 3.5 billion tons of emissions per annum. And in addition to that, we've seen in the carbon markets a violent repricing across the board, both voluntary and compliant markets. And I'm sure most people on the call would understand that the European EUA is the largest of the compliant markets, and Australia has its ACU and New Zealand has its NZU. But the compliant markets still only cover 25% of the global economy. So the voluntary market that Paul was talking about is growing, and that's corporates voluntarily mitigating their surplus emissions, scope 1 and 2, and even some going into scope 3. Scope 3 is 7 times the size of scope 1 and 2. So just from a pricing perspective, EUAs have rallied approximately 300% in 2021. ACUs have moved from $15 a tonne to $50 today. And so that's the best performing of the so-called commodity asset classes compared to energy commodities over the same period of time that have increased 50%. In the voluntary market, though, where the prices aren't as transparent, and we're working with S&P Platts to publish indices since August last year, we've seen over 800% rise in prices in the voluntary market, which now goes to show that those numbers that we talked about, McKinsey on the left there quoting, the size of the market scaling to 2030, the net zero ambitions of those 1,500 corporates is making the market structurally short. There's just simply not enough supply of good quality voluntary carbon credits. And that was our big attraction to partner up with P&G Government and Mayur Group in looking at P&G as an opportunity to originate a high quality nature-based carbon offset. So I'll just pause there, Paul.
Thanks for that, Eddie. Okay, so if we look at the role of nature-based carbon offsets, the RED projects really are the only way we as a society have found to put a value on the standing tree and threatened forests. That's a quote from Everland. Everland are a partner with Viridios and now working with ourselves. They have, and I'll let Eddie just conclude on this slide in a moment, but they have 10 projects globally, very large scale projects globally that they've worked on. So the key here is, if we look at protecting the world's forests, deforestation is the second largest leading cause of climate change. We've got 1 billion of the world's extreme poor depend on the forest resources, and 80% of all life and land is found in the forests. So P&G, those of you would be aware, it's been covered from those like David Attenborough, from multiple conservation groups, have some of the most pristine, untouched, biodiverse forest in the world that has been slated for logging and is being logged. They use that as a source of income. They're obviously a country that needs money. The GDP per capita is just over $2,000 per person. So they need income, and we're showing and providing a pathway where they can actually do better by preserving their forest and their livelihoods, not just for themselves, but their future generations, and from a financial point of view, benefit more than what they'd be benefiting from should forests be logged in their vicinity. So I guess these RED Plus projects is about protecting a carbon, but also protecting from a nature and social perspective the way of life that currently exists in these pristine areas. And that's the key focus for us, is to really ensure that we can protect those forests, but also provide benefits to the people on the ground. Eddie, don't know if you want to add anything more there?
Yeah, I think just stepping back, one of the clear signals from Glasgow was the unanimous decision by both the public and private sector to stop deforestation. So that was a clear signal. There's lots of moving parts and to be discussed and concluded areas of Glasgow still, like Article 6 and which countries trade with which countries for what type of carbon credits. But stopping deforestation, and as the slide says, is 10-20% of global greenhouse gases, is essential. And one way to do that, other than philanthropic capital, which hasn't exactly worked because the world is still deforesting, is through market-based mechanisms. And if you look at the type of carbon credits that can be originated through the voluntary market, RED is one of them, so reduced emissions from deforest degradation. In the compliant markets, you have the allowance markets. That's a permit to pollute up into a budget, and then you need to buy permits. The underlying activity, though, is just an allowance that trades like a digital asset between counterparties. In the voluntary market, you can actually say it's the real deal. Every project originates a ton of CO2 through avoidance or removals. And one of the most favored type of underlying activities to date has been these nature-based solutions, as opposed to carbon offsets that originated from avoidance like renewables, where the additionality factor is questionable. Most of the revenues are electricity sales into the grid. You've got cook stoves in Africa. You have methane avoidance projects, waste management, transportation efficiencies. even regenerative farming, better regenerative farming practices. And if you do that above the baseline, you get issued a credit by Vera and so on. But one of the areas that, to repeat myself, that has gained huge momentum and appeal to the corporate world are these red projects, because they're scalable. Back to the structurally short position, you're talking about areas of land, 500,000 hectares of land to 1 million hectares of land, that would generate 2, 3, 4 million tonne of carbon credits per annum, which would satisfy a big globally listed corporate's emissions footprint. Naturally moves towards these high scalable red projects. In addition, what Paul was talking about was the co-benefits. So the unit measures the tonne of CO2, but when you project finance an area of land that was earmarked for deforestation, whether it's palm oil in Southeast Asia or soybeans in South America, logging in Africa, logging in PNG, it's still an activity that generates revenues for those landowners. So to replace it through market-based mechanism carbon financing is a very key way to generate that avoided deforestation on that land. And we believe the PNG project, because it's scalable, because it's got so much biodiversity, ticks off many boxes. One of them is biodiversity, which is, if the KPMG report that we're happy to circulate post the call to everyone, indicates that on most sustainability reports, biodiversity is one of the most underweight positions out of the 17 SDGs. So when you're buying a red project in PNG, for instance, you're protecting life on land, life below water, SDGs 14 and 15, protecting the ecosystems, and giving work to the local indigenous people and the locals on that land that would never have received that income if it was just pure philanthropic capital. So it's a pretty exciting project, and it's just a very quick summary of the gamut of offsets in the voluntary market and why this one's so important.
Thanks for that, Eddie. Cheers. So I think just pictorially, how do these nature-based offsets work? Essentially, the company owns and operates GHG emitting factories and processes, a company or companies. Either a linked company or a separate company identifies areas. In this case, it's a linked company because we have our own businesses, such as nation building projects in PNG. And these areas are then reclassified for carbon preservation with the full and prior consent from the underlying landowners. Appropriate agreements, permitting, etc., is entered into to solidify those arrangements. And then the next step is where this pristine forest is preserved, and these nature-based carbon credits that would have been lost if logging were to continue are saved. Now, the quantum and the type of carbon credits, and Eddie has mentioned the different types, are independently verified. We don't verify them. There has to be an independent group like Vera that signs off that the amount of carbon being sequestered and preserved is indeed a independently verified number with an independently structured and set of parameters, assessment parameters. So as Eddie was mentioning, then the step 4 with the GHG emitting company purchases a carbon credit, they get 1 metric tonne of carbon. But the key here that offsets their business is when they buy that from the PNG projects we're proposing, they're not just buying 1 tonne of metric carbon emission offset. They're buying a project that from the ground up has had protected significant biodiversity and made a major improvement to the landowners on the ground, because they're the ones that receive the majority of the revenues from these projects. And that's actually, in fact, the way it gets assessed and signed off as an independent carbon credit is a demonstration from a carbon accounting point of view that those benefits are being physically evidenced down at the village and landowner level. So our progress to date on these nature-based forestry carbon areas, those 3 areas I showed you at the start of the presentation, there's 7 carbon credit projects within those 3 areas, totaling 1.4 million hectares. Out of that, 3 projects have already been granted, some 800,000 hectares. Signing of a heads of agreement with PNG Forest Authority and landowner consents, as I mentioned. We further signed a tripartite agreement with the relevant landowner groups and PNG Forest Authority. We've got written support from the respective provincial governors. Now, a provincial governor is equivalent to our premiers here in Australia. And the appointment of, we've got PNG's carbon credit expert, Professor Chalapan, who's the head of the University for Climate Change, University of PNG, advises Forestry, Climate and Prime Minister's Office, and will be working alongside us with Everland, Wildlife and Viridios. So Mayur's development plan now is the verification part, where we will verify these nature-based carbon credits using Vera. The PNG government, the landowners, as I said, will receive a large majority of the revenue on a free carry basis. Mayur will manage and fund the verification process in conjunction with Viridios Capital, VT Carbon Partners and Tribeca, which we'll talk about in a moment, which was recently announced. And then we'll ensure that these other benefits for the community that we've talked about aligned with the UN Sustainable Development Goals, which Eddie used the acronym SDGs. So what we're aiming to do is generate the highest quality nature-based voluntary carbon units anywhere around that flows from carbon to biodiversity to sustainability and to the people. By doing that, we want to be a carbon credit provider of choice and for those respective reasons. And I think us partnering with groups such as VT Carbon Partners through Viridios Capital and through Tribeca, Everland and Wildlife Works, who already have a large track record of large-scale projects throughout the world, adds to the confidence that our decade-plus experience in PNG can be leveraged, and we can ensure that we're able to deliver a product that's going to benefit not only ourselves with regard to our own operations, but also the surplus into the broader market. So I've mentioned these names, but let's talk about the proven and credible development partners and what basically their roles will be. So if you look at the project origination and development, that's with Wildlife Works, ourselves, Mayur and Tribeca. That will be under VT also assisting. Marketing will be Everland and VT Carbon Partners in the trading of these credits globally. Eddie, would you just like to expand on the proven credentials of your partners being Everland and Wildlife?
Sure. So the way a project would work, obviously through the verification process, one project needs to be proven to be additional. Secondly, that the leakage, so a ton is really a ton of CO2. So whether it's nested in a government's emissions allocation for forestry, as an example of what a deforestation. And then thirdly, the co-benefits, which are also independently verified. So it's not self-claiming these co-benefits, the community work and the biodiversity, but an independent auditor comes in and looks at those co-benefits to ensure they actually occurred. So then you can tick the co-benefits in addition to the ton of CO2 that's avoided, and that would add a premium to the underlying project depending on the quality of those certified co-benefits. So Wildlife Works is probably the world leading project developer of protecting forests from deforestation, specifically working in the largest projects in Africa, Kenya, DRC, in Asia, Cambodia, Indonesia, and in South America, Peru and Brazil, where the biggest forests reside, and work with local communities to ensure that the proceeds of the sales go to the right people on the ground. And they've got this 20 to 30 year experience in what's required for a RED program to be the most appealing to corporates. And because it's, at the end of the day, the corporates buying RED projects are looking for impact as well as a ton of CO2 that's avoided. So Wildlife is the world leading developer. They've just recently announced a 20 million tonne per annum project with ourselves, Viridios, investing in them. The chairman sits on our board, so we're close to the team. They're very excited about working with PNG because they know what work needs to be done on the ground to ensure the highest quality RED project is issued and distributed. And so coming to distribution, Everland is a subsidiary of Wildlife Works, although it operates independently. It's probably the largest marketing agent, deals with the largest corporates globally, and has been working with them for years on helping them mitigate their surplus emissions, scope 1 and 2, and some of them scope 3. And they know what's required, what they're looking for from an impact and appeal perspective. So they'll be from the get-go working on the project origination team. VT Carbon Partners is ourselves, Viridios Capital, in partnership with Tribeca. So we'll be working alongside Everland on distribution, but in addition, funding the project at origination. So the three global players, experience in not only RED, but the whole gamut of offsets coming to the party.
Thanks, Eddie. So what's the size of the opportunity? We've made this announcement, and what we wanted to take the opportunity here to do was to explain it in just some simple mathematical terms. So the major carbon inventory and revenue picture is that May's carbon estate area currently sits at 800,000 tonnes, an opportunity to go to 1.4 million and beyond in the heads of agreement with PNG Forest Authority, in the HOA, sorry, with PNG Forest Authority. And from a carbon inventory point of view, depending upon the range, and what this is about, how many tonnes of carbon reside in those forest areas, and you have to take into account leakage and other things that Eddie mentioned. That is the process that we're going through now. We know that the areas secured have probably some of the densest forest in the world and would be up to the top end of that range. However, we're just pointing out there is a range, and there's a process that needs to go through to establish how much carbon per hectare resides. And then you look at the pricing and the voluntary carbon market. As Eddie talked about, we've used a figure of $10 US, which was based on a Platts Carborex carbon credit indice, which I'll show you in a moment. But then you can look at the compliance markets and the range. Now, there's a big arbitrage between the compliance market and the voluntary market, but as the voluntary market begins to demonstrate the strength and type of carbon credit that can be secured for corporates, we see that trajectory and that arbitrage drastically narrowing, and we see that occurring, on a monthly basis as it stands. Some of these numbers are a little outdated actually, and the numbers are higher than this now. So just getting into the math a little more, if you say, look, this is 800,000 hectares, if you were to select a mid-range to say, look, 200 tonnes of carbon per hectare, and this is over 30 years, as you can see there, this isn't per annum, this is over a 30-year basis, so you've got to divide these numbers by 30 to get annual revenues. And then you apply the price of $10 a tonne carbon for the voluntary price. You can see there that there's an example of gross revenue of circa $1.6 billion. And where does that money go? Well, you've got 75% of those revenues going to the landowners and the PNG government, and circa 25% going to Mayur Renewables and its development partners. Now, that's only on that example. Obviously, if we secure the 1.4 million hectares and then beyond, and we prove that we can do this with our partners in a very sustainable way, PNG's got a huge opportunity well beyond 1.4 million hectares of reslated forest area. In addition to that, the carbon intensity as well. So you can run your finger along multiple scenarios there and look at what the various revenues may be, and then how that gets split between the landowners, PNG government, and ourselves. We're expecting to have the first project verified within the next 12 to 18 months. We'll be working with our development partners and getting on the ground and ensuring that the formula that internationally is recognised, not only by the international accrediting agencies as acceptable, but as where the corporate's appetite is going, not for just carbon offsets, but also the additionality of social benefit and biodiversity, sustainability, etc. We'll be working with these development partners who have a large amount of experience in these spaces. This really just shows the Platts Carbon Credit Index, just giving you an idea that these things are becoming, there's indexes for that, and then you can see the Eco Protect Carborex, and as Eddie was saying, they're skyrocketing in price because there is a huge shortfall of quality carbon credits available in the market for these companies, these 2,000 companies globally, and then others, to meet their commitments with regard to carbon offsets, but also supporting local communities. Eddie, these last 3 to 4 slides that I've just covered off on, would you like to add anything else to that?
Maybe just on the price trajectory, or maybe not, it's not the price trajectory, but it's observable data. These are co-branded indices with ourselves, Viridios. The voluntary market has been reasonably opaque, unlike the compliant markets where there's a futures contract, and only recently there's more liquidity and more observable data to be observed and analysed for the voluntary markets. But what you're seeing there, the Eco Protect Carbex is another name for RED. It's economy, the protection of forest. The specifications of that index is similar to a project that we would look to employ in the PNG project that we're talking about now. So, that is one of the highest performing of the voluntary markets, from sub $5 to $16. And all the forecasts from research houses globally, whether it's Cambridge, Oxford, Princeton, have indicated the right price of RED to really change behaviour and to put an abrupt stop to deforestation is triple digits, ranging from $200 to $600 a tonne. Now, we think we thought that was far-fetched when the market was trading at $5 last year, but it's a 3x move in a very short period of time. But it just gives you the scale of the forecasts that are coming from credible agencies globally on what the right price of carbon should be to avoid deforestation. And that's what these 2 slides are showing.
Yeah, and noting that, Eddie, as well, is that you look at the compliance market and how high that is in, what's the euro in Europe, what's the current?
So we think that there's the low-hanging fruit, which is the voluntary markets, which are $10 to $20 a tonne, depending on the underlying activity, whether it's renewables, whether it's soil carbon, whether it's savanna fire management, underlying activities in Australia that generate a voluntary carbon credit. Then you've got the compliant markets that range from 50 in Australia to 95 US dollars for the EUAs. And then you've got carbon removal, direct air carbon capture, and other type of removal activities like biochar trading at €300 a tonne. So it's a very wide range, and we think at some point the market converges, because a tonne is a tonne globally, depending on the credibility of the underlying project and all these core principles that are being initiated now and best market practices, that we think that a high quality voluntary will catch up to the at least middle ground, which is the compliant markets, which is high double digits.
So look, so thanks for that, Eddie. So look, that brings to conclusion the presentation part of the session. I'll just hand over back to Anthony to ask any questions that may have come in.
Thanks, Eddie, and thanks, Paul. Great presentations there. Now, a few questions have come in. Thanks very much, everyone. First of all, from registrants in advance, and just looking at the questions here in advance we've had already. As part of your plans for the Forest Carbon Concessions in PNG, does Mayur support other village-based organisations for green energy? Thanks, Paul.
Okay, so look, in relation to that question, the answer to that is yes. A point in case is if we look at our plans for the forestry and for the carbon, inevitably all of those areas will be looking to ensure that they have renewable electrification and support them with that. Now, that isn't just words. We're actually doing that in other projects that we currently have in our, for instance, our lime and cement business, where the village that we work in close proximity to, whilst it's only 24 kilometres from Port Moresby, the main capital city, they don't have electricity. Not for their schools, not for their houses. They have no refrigeration, nothing. So we, with regard to assisting in green energy, we're assisting them with the provision of microgrid solar setups, and we'll continue to do that in the communities we work with. The key areas that we try to support villages in is to get the base fundamentals right, and the base fundamentals for any person wanting to live in some form of standard acceptable is power and clean water, sanitisation. So water and electricity for us is important. So they're the two things where we are working with our stakeholders, being landowners, with, and we won't diverge away from that at all with regard to our approach with these landowners where the forestry projects are, and there is a big opportunity there for them.
Excellent, thanks, Paul. Now on to another question here we have submitted in advance. What are your plans for sustainable business developments for landowners from the Parari River by Mayur, apologies for the pronunciation, in the Gulf Province? Thanks, Paul.
Okay, so I think from sustainability with landowners in that area, whilst we don't have permitted forest projects in that area as yet, if we were to have that, as I said, we would deploy the same level of focus that we would, say, in Western Province, rather than where those areas that are being talked about are in Gulf Province. But one of our other projects is in Gulf Province, which is our mineral sands project going into construction this year. And with regard to sustainability, what we'd be doing there is post-mining. Currently, they, again, with regard to bringing power to areas there's no power and water, but also with regard to food. They have their staple diet out there is sago. It's a very backbreaking manual process. We have committed from a sustainability point of view and land reuse post-mining is to establish very easy to operate mechanized sago operations. So their staple diet enables them to, on a mechanized basis, not only feed themselves, but also create an industry using our own supply chain to feed back that product into Port Moresby. So, you know, we are committed to Gulf Province and for our business there. And as part of the commencement of construction, we've also, in our other projects there is a benefit sharing package that we've committed to the provincial government. So thanks, Donald, for that question. Hopefully I've answered that.
Thanks, Paul. Excellent response. Thank you again. Now maybe one for Eddie, if you're still there, Eddie. Just definition of carbon concessions. Can you define carbon concessions? Thanks, Eddie. Sorry, Eddie, can you unmute?
Might have dropped off.
Okay, maybe we'll just run with Paul.
Yeah, I can answer that. So the definition of the carbon concession is, look at it from a permit point of view. And what I mean by that is that it's an area, this concessional area is a permitted area, and it's a permitted area on the basis that it will be used to store carbon. So if you take, for instance, a forestry permit to log, whereby they have a set parameters with regard to what they are and are not allowed to do, how much they're allowed to cut. This permit through the Forestry Department and in consultation with the Climate Change Department enables us, and again specifies under a permitting regime what we can and can't do. We can't chop, we can't log, we can conserve carbon. We're able to conserve carbon in this concessional arrangement for a set period of time, circa 30-35 years. We're able to, we're expected as a condition to abide by the heads of agreement and tripartite agreement that was signed, and we are required by law to then distribute the revenues received in accord with the commitments made in those agreements, which mirror what's expected by groups such as, or standards such as RED, and what are assessed by groups such as VERA.
Excellent, thanks, Paul. And just looking at some more questions that have come in, and we've got a few questions here. Thanks very much, everyone. And don't forget, there's still time to ask more questions if you'd like to, so please feel free. Question here from Andrew: how much of the 800,000 hectares would actually be logged if the RED Plus didn't proceed? Was the area gazetted prior to this moment for 100% logging? Thanks, Paul.
Very good question, and the answer to that is yes. So there's a forest management agreement and an agricultural agreement that overlies these entire areas. They are slated for logging. It's not just a recent event, they were slated for logging. Some of these concessional arrangements last for 50 years. So our focus was to look for areas where the logging has been slated. It's not, there's no conjecture around, oh, was this just slated yesterday and now you're just repurposing it. This is, you can't argue the fact with the documentation we have that the Forest Management Agreement existed, and under the regime that was set up, that area could be logged. So the key here, though, is depending upon the time period that it would be logged, also needs to be taken into consideration the way in which the carbon credits are claimed. So thanks for that question.
Excellent, thanks, Paul. And another question here that's just come in: for your flagship Central Cement and Lime project, which I know you're looking to go to net zero by 2024, what does this recent agreement mean, and how's that project looking right now for 2022? Thanks, Paul.
So look, we've done a full carbon inventory assessment in relation to the Central Cement and Lime project. We've identified the offsets that we need to achieve. Now, those offsets are going to come about by a number of different ways. It's not, and I highlight, not going to come about just by using carbon offsets. We're committed to using technology where currently available to mitigate offsets and or displace fossil fuels where possible. As an example, we've done a very detailed solar study that will be able to penetrate and offset some fossil fuels. And in offsetting the fossil fuels, we'll be able to ensure that part of the energy requirement would be used by solar. Therefore, we've got a very clear mandate and position to ensure that we use multiple areas of focus with regard to, it can be electric vehicles, it could be solar, it could be carbon capture when it's there, it can be energy efficient processing systems, it can be revised production technology, as well as carbon offsets. All of those things will contribute.
Awesome, thanks, Paul. Another question here about legal position. I'll have a look at this question here. Thank you. From Chris DeBella. What is the legal position about carbon concessions in PNG? Thanks, Paul.
Okay, so there's a carbon concessions in PNG. There's the Climate Change Development Authority has recently actually just had some legislative changes. They have a position on that in relation to how carbon is managed. There's only a couple of RED accredited carbon projects in PNG currently. There's a requirement to have full informed prior consent from landowners. Forgetting what the legal position in PNG just for a moment on the consent part, globally to get a verified credit, you're expected to ensure that you have those consents in place, which dovetails into the PNG legal framework that CCDA and forestry have. In conjunction with the legislation of forestry and their medium-term plan of reforestation, sustainability and carbon estates, that has been applied. In addition to that, the compliance with the CCDA Act is being complied with also. So there's, look, with these things, also the one would understand since Glasgow, there's continuing evolution of the carbon markets and the way in which things are being tightened up. And as these things tighten, if someone was to ask me, is there going to be any more legislative reform to keep pace with the global market over time? I would err on the side of caution and say yes, there would be, but at a high level, that is the legal position with regard to PNG, and the CCDA Act and Forestry Act clearly stipulate the requirements.
Excellent, thanks, Paul. Another question here about PNG itself. What are the benefits for PNG, I guess, and the region more broadly from your Forest Carbon Concessions agreement? Thanks, Paul.
So could you say that again?
The benefits for PNG and the region more broadly.
Yeah, so look, I think for PNG, it's going to offer landowners for the first time revenues that they wouldn't have had to maintain their current livings, I guess their area where they live for themselves and future generations, and receive money for that, and they don't have to resort to logging to receive income. I think across the board, PNG has an opportunity, huge opportunity, to lead the way in that, because no one will argue with the pristine biodiversity that Papua New Guinea has. We see there being large employment opportunities there for ongoing management, sustainability, auditing, reporting, etc., and also then the sustainable development projects that come with the revenues they receive. More broadly, for the Pacific area, it gives an opportunity for when someone buys a carbon credit in or from, say, a PNG project, the opportunity there is you're not only offsetting and buying a carbon credit, you're also helping PNG pull itself out of poverty, give people access to very basic things like water, power, employment, women's empowerment, and those sorts of things. So you can be assured you're buying a high quality carbon credit, but all of those additional or additionality, as Eddie called it, benefits come in. I'm not sure if you wanted to add anything to that, Eddie.
Yeah, I think so. My settings froze, but a whole new industry can be created here and potentially be a new export market for PNG as well. Just thinking about the requirement for developed countries to mitigate their nationally determined contributions, the emissions that they've pledged in Paris to reduce, can be internationally traded. So that's an export market potentially for PNG to drive, especially for neighbouring developed countries like Australia and New Zealand that needs those offsets. And that would create a whole new industry in Indonesia, not in PNG, including, you know, local community folk that would need to be retrained in proper forest management, science and academia, you know, training up on new technologies as well, because part of a RED project is not just about protecting forests and life on land. You know, it's putting solar panels in the local communities for affordable and clean energy. So there are many new jobs that can be created from a project like RED in PNG.
Thanks, Eddie. Great to have you back on. And now a question for either Paul or Eddie, which I've got to scroll down to read. Given that PNG is still very much a developing country, is the PNG Forest Authority or any other local regulators able to enforce agreements made with local landowners? E.g., are they able to stop unscrupulous parties continuing with illegal deforestation? Bit of a tricky question here, either Eddie or Paul. Maybe Paul first.
Yeah, I can answer that. Look, I think Yeah, I acknowledge the comment around PNG is a developing country, but let's also be cognizant that PNG is a developing country. It hosts the 4th largest gold mine in the world. It has an $18 billion LNG facility that ExxonMobil has put in place in the last several years, and there's Total and Santos / also looking to double down with another $14 billion. Those sorts of projects are large-scale projects, and in relation to the enforcement of agreements made with local landowners, agreements get made with landowners. Our license to operate is to enforce our commitments to landowners, and we as a company and our development partners, things such as ongoing people on site, monitoring, drone footage, photography, video surveillance, satellite surveillance, all of those things are used to stop those unscrupulous activities occurring. If that is occurring, that jeopardizes our direct ability, number one, to market our carbon credits against our own project in PNG, and two, be seen as a credible player in the country. We, alongside the other very successful developers in PNG, will be taking full responsibility to ensure that the authorities are made aware if any such things would occur, and ensure that our investment and our commitment to the government and the villages are upheld. So we don't see there being a problem there. We'll be aligned with the landowners and have that ongoing surveillance, and that's part of when you're receiving these revenues, that's part of the requirement on a year-by-year basis to continue your accreditation is to demonstrate those things aren't occurring.
I think just if you allow me just to add a couple of points, because it was a really good question around where the proceeds will be driven towards, and it's a big opportunity for innovation. In reality, if you think about illegal logging, that happens in every developing country for deforestation. Even if you have the permit from the ministries of forestry in whatever country to avoid deforestation, there will be pockets of illegal logging. And so we're already speaking to telcos around the world that want to introduce their own innovation around space to mobile, so you can hear the chainsaw, a kilometre away. If you think about 1 million hectares of land, it's a big area of land to manually manage. So new technology where you have signals on various parts that you don't typically get a signal creates innovation that, again, would be funded through the proceeds of a project like this. And so as the years go by, one of the lessons learned from Wildlife Works and others is that innovation plays a significant role in better forest management, protecting from illegal logging.
Awesome, thanks Eddie, thanks Paul. Now let's look at other questions. Another question's coming in, just maybe last question, everyone, about PNG banning logging. Maybe you want to touch on that?
Yeah, no problem. Thanks. Look, I think let's be really clear on what was the headline, what was in the press versus what the actual commitment was. There is an intent that if they could ban logging, they would do it on the basis, and let's be very, very clear, on the basis that new industry could supplement the revenues, such as what we're doing. It's over $1 billion industry a year, and they're not going to just simply, as a developing nation, say, we're ticking a box and going to forego $1 billion for our people, whilst everyone else continues and has had the opportunity to develop. So we need to be very, very clear about what has been announced. There's been intent statements made about banning round log exports since 2015. And that has continued to move out because they haven't had the alternatives. Now we're providing something that is a real alternative that will enable them to move forward with stopping logging, and us and the revenue coming in substituting that. So the announcement, just to be very clear, was about only considering that position upon substitution of alternative revenues, which is what we are.
Great, thanks Paul. I don't know if Eddie, if you want to touch on that as well or not, leave that to Paul.
No, I think you covered it well.
Thank you. Look, guys, we're nearly finished, but maybe final comments from, first of all, from Eddie, our super guest from Sydney. Eddie, thanks very much again for your time today. Maybe just a brief comment on how you got involved with Mayur and how, I guess, how you see the future of this project with Mayur. Thanks, Eddie.
I think it's one of the most exciting projects that we have in our pipeline at Viridios Group, where we publish technology. You can see the indices with S&P Platts, and through our partnership with Tribeca, we're now into funds management, where most of the funds get deployed in primary projects, good primary projects globally. We see the project with Mayur Group as probably the most exciting one. It allows us to partner up with Wildlife and Everland again, but in this part of the world. So we've been very underweight exposure to the Pacific and Southeast Asia. We're predominantly invested in Africa and South America. So based on the fact that we're an incorporated company in Australia and we have multiple corporates and clients on our database looking for high quality offsets in this region, this satisfies a lot of boxes for us. So we're quite excited about the prospect of moving forward.
Awesome, thanks, Eddie. And now maybe Paul, maybe final comment on, I guess, working with Viridios on the project.
Yeah, so look, I think we're as I've mentioned before, we're really excited about working with Viridios, VT Carbon Partners, Everland and Wildlife, and Tribeca. For us, it's all about how do we position PNG to be viewed as credible internationally and not reinvent the wheel and do things where 1 + 1 can equal 3. We need to bring the landowners firstly and foremost along where they get the majority of the benefit, and PNG government gets a good slice of the benefit as well. And then we can demonstrate that we're sure that this will be the tip of the iceberg. PNG, if you fast forward 10 years and say, hey, if we get this right with the right types of people coming in, and not the Johnny come lately people just all jumping on the carbon bandwagon, it's people that have a legitimate need. We have a legitimate need for carbon offsets to support PNG, so it has its own lime and cement, so it's not importing. It doesn't have its own lime and cement in the entire country, has to import everything. So we're nation building, supporting the local community with many thousands of jobs that will come out of that initially and then flow on. But we need to do that in a responsible way. But also saying that, then there's a bigger opportunity for PNG, and this is where the VT Carbon Partners opportunity really excites me, is that they have done it. They've done it. They've got a track record. They're bankable. It's around the world. You can look them up. You can look everywhere. It's not a Johnny come lately. These guys have been invested in this space for 20 years, and it's coming to the fore where demonstrable action needs to happen now. There needs to be an act now strategy deployed, not just in PNG but around the world, and we're going to be a part of it.
Awesome, thanks again, Paul. Thanks again, Eddie, for your time today. Great having you on the line. Hope to see you again soon, because that was some great insights there into the carbon market, which you can't just get from any ordinary analyst. So thanks very much for your time today. Thanks again, Paul. Anyone who missed with the question today, we'll try and get back to any questions we missed. Thanks again for your time. A recording will be sent to all your registrants, so you get a recording later on. And again, please stay tuned to Mayur, subscribe to our email list, follow us on social media, and please stay tuned for more news from Mayur. Thanks, everyone, and have a great day. Thank you.
Thank you very much. Have a great day ahead.
Thank you.